4.2 billion for Zim. Hapag-Lloyd is basically playing Monopoly with the ocean.
You just like the massive number. Taking a shipping giant private is entirely about hiding their supply chain chaos from public scrutiny.
Oh, come on. It's brilliant consolidation, just like Apollo dropping 3.7 billion on Nippon Sheet Glass. They're just buying up the physical world this week.
I'll give you the glass deal, but I pulled the Zim footnotes, and that premium is a total hallucination.
Then show me the math, the rundown. $3.7 billion for glass.
Not just any glass, Nate. Nippon Sheet Glass. Apollo is taking them private, and I actually love this play.
Classic private equity move right now. Rip a solid, boring manufacturer off the public markets so you can fix the margins without a bunch of retail investors screaming at you every quarter.
Exactly. Architectural and automotive glass. It's unsexy, capital intensive, and absolutely essential. Apollo loves a cash flow puzzle, though I want to see the debt structure they're using to fund it.
Speaking of puzzles, Cencora is carving out the retina business from EyeSouth Partners, 1.1 billion going to Olympus Partners.
I read the footnotes on that one. It's a highly specific carve-out. Cencora is expanding its pharma solutions portfolio, but $1 billion for just the retina division? Olympus made out like bandits here.
The financing markets are thawing, Maya. Analysts are seeing a massive year-over-year jump in deal value. Everyone is trying to buy something before the AI premiums price them out entirely.
Oh, come on. The AI premium is already baked in, and buyers are actually getting spooked.
Spooked? We just saw 3 AI startups get bought for 50 times revenue last week.
Look at the new Equitech Global Buyers Report. It specifically says buyers are hitting the brakes on highly hyped AI assets. They're finally doing real due diligence instead of just throwing term sheets at anyone who says neural network. The party is cooling.
I refuse to believe tech bankers are learning self-control.
The data says they're being forced to.
Fine, you thought if they're bored with AI, they can just buy sports teams like Blackstone.
Wait, really? Blackstone is doing a sports deal?
The rumor mill says they're kicking the tires on a stake in a global cricket league.
Cricket.
Don't underestimate the global cricket market. It's a massive media rights play. Although I'm way more interested in the gossip that Estee Lauder is circling Puig. A Spanish fragrance buyout is exactly the kind of vanity drama I need right now.
We'll see if the perfume math adds up. But forget cricket and cologne for a second. The biggest shocker today is happening on the water.
Oh, you mean the $4.2 billion shipping shakeup?
Hapag-Lloyd swallowing Zim whole and pulling them right off the New York Stock Exchange. The big one.
You cannot look at a $4.2 billion shipping deal and tell me the logistics sector is cooling down. It is just not happening.
Oh, I am not saying it is cooling down. I am saying Hapag-Lloyd is paying peak cycle prices for Zim. $4.2 billion to take an Israeli shipping giant off the New York Stock Exchange.
Which is exactly what you do when you want to restructure a massive fleet without quarterly earnings calls breathing down your neck. It is a brilliant strategic play.
Brilliant? I was digging through the filings this morning. Taking Zim private makes sense for operational efficiency, sure. But the premium they are paying? It feels like they are buying a house at the very top of the market just because financing conditions finally improved.
See, you are thinking like a tech reporter. You want software margins. Shipping is entirely about capacity, routes, and steel in the water. Zim gives them immediate, massive leverage in the Mediterranean and Pacific. It is a moat, a literal watery moat.
Did you really just say watery moat?
I did. My old managing director would be so proud right now. I could put that on a pitch deck and charge $10 million in advisory fees.
He would probably tell you to check your valuation comps. If you look at the year-over-year M&A data for early 2026, yes, deal values are way up, but buyers are supposed to be getting smarter. Look at the recent Equitech report. Buyers are doing incredibly deep due diligence on highly hyped AI assets right now. They are terrified of overpaying. Why does shipping get a pass on basic math?
Because you cannot download a cargo ship, Maya. Physical assets are trading at a premium for a reason. Hapag-Lloyd knows exactly what they are doing. They are buying raw market share and pricing power.
Pricing power that fluctuates wildly with every single geopolitical headline. There is a reason public markets were discounting ZIM. I just think taking a public company private right now carries risk premiums that are completely missing from that 4.2 billion number. Read the footnotes on their debt structure. It is incredibly aggressive.
I will take the other side of that trade. I think getting ZIM away from public market scrutiny is the entire justification for the premium. It is a massive trend right now. Private equity has been taking public companies private all year to drive growth away from the glare of retail investors.
Well, speaking of taking things private away from the public glare, Hapag-Lloyd is not the only one throwing billions at unglamorous physical assets this week.
Exactly. Apollo just wrote a massive check for some very fancy windows.
$3.7 billion for Nippon Sheet Glass. Apollo managed funds are buying an architectural glass leader, and I actually think their valuation model makes a lot more sense than your watery moat. Voices.
So everyone is screaming about this massive spike in early 2026 deal value, and of course, they're pinning it all on the great artificial intelligence land grab.
Which is exactly why I love the Equitech Global Buyers report that just dropped. It throws completely cold water on that narrative.
Oh, come on, it's not cold water.
It's freezing cold water, Nate. The report literally says buyers are getting incredibly cautious. They're doing brutal, scorched earth due diligence on anything with AI slapped on the pitch deck.
Right, but they're still buying. The financing conditions are the best we've seen in 18 months. You can't deny the checkbooks are open. Look at the sheer volume of public to private transactions right now. Private equity is sweeping up everything not nailed down just to get these companies away from public market scrutiny.
I don't disagree on the take private trend, but you're conflating two different things. PE firms taking mature, cash-flowing businesses. Private is not the same as throwing billions at a vaporware AI startup.
I'm just saying the underlying M&A engine is running hot across the board.
Because the debt market's improved, Nate, not because some generative AI chatbot is going to revolutionize the architectural glass industry.
Okay, wow, that's a very specific stray bullet.
I have my targets.
But seriously, you bring up architectural glass and we have to talk about Apollo. They just dropped $3.7 billion to take Nippon Sheet Glass private.
Exactly my point. A real company, real cash flow, and zero mentions of machine learning in the press release, thank God.
Oh, I guarantee you some associate in Apollo's Tokyo office tried to sneak an AI bullet point into the investment memo.
Absolutely. And a managing director probably threw a stapler at him.
Highly likely. Speaking of throwing money around in unexpected places, the rumor mill is completely spinning out of control this week. Have you heard what Blackstone is sniffing around?
I did. And honestly, I had to double check my calendar to make sure it wasn't a joke. Spill the tea.
I'm telling you, Blackstone buying into a global cricket league is the most private equity midlife crisis move I've seen all year.
A midlife crisis? They're chasing live sports premiums. Though I would pay good money to see Steve Schwartzman try to explain a wicket.
Exactly, but think about the broadcast rights in India. It's a massive, untapped cash flow for US firms.
Untapped? The valuations are already astronomical. You think Blackstone is getting a bargain on cricket? Come on. They're just bored of enterprise software.
Speaking of bored, the beauty sector is getting restless. The rumor mill is screaming that Estee Lauder is circling poo.
The Spanish fragrance house? That's actually a really defensive play.
Defensive? It's a luxury fashion and fragrance empire. It's a crown jewel.
It's a panic buy. Estee Lauder has been bleeding market share in prestige beauty. They need Puig's European footprint just to stop the bleeding.
Oh, you're so cynical? You don't think someone in the C-suite just wants to own Rabanne?
I think someone in the C-suite wants to keep their job.
Fair enough. Meanwhile, Gilead Sciences is doing exactly what you love. Quietly shopping in the biotech aisle.
Yes. Finally, some discipline. Word is they're nearing a $2 billion deal for Uro Medicines. No flashy press tours, just plugging a massive hole in their autoimmune pipeline.
$2 billion is basically a rounding error for them anyway.
But it's a smart rounding error. Unlike buying a cricket league.
Hey, live sports are undefeated. Just wait until tomorrow when we see what Sony is cooking up.
Right. The home entertainment rumors with TCL. If that drops, it's going to shake up the entire consumer electronics board. Tomorrow's radar.
The most interesting thing on my radar isn't tech. It's Blackstone circling a stake in a global cricket league.
Oh, please. That's just private equity getting bored. They're buying vanity sports assets because the AI targets are too expensive.
You're wildly underestimating cricket. It's the second most popular sport on Earth. Blackstone sees a massively undermonetized broadcast market. It's a pure media play.
You don't buy a sports league for predictable cash flow, Nate. You buy it for the VIP box, though maybe they're just avoiding tech. Equitech's new report says buyers are finally doing actual due diligence on these hyped-up AI startups.
Which is exactly why Blackstone is pivoting to wickets.
I'll believe the synergy when I see the term sheet. But for tomorrow, watch the hardware space. Sony is reportedly inches away from a home entertainment deal with TCL.
Wait, really? Sony and TCL? Now that's a corporate culture clash I want to read the filings on.
I already have my highlighters ready. We'll pass the footnotes for you tomorrow.